Welcome to the latest Motley Fool scoreboard. I'm on in Chalk and Blue. We've got longtime fools Dan Kaplinger and Jason Hall giving a 1 to 10 rating to the company that rivals Tom Brady and LeBron James for long-term winning. It's Apple, ticker symbol AAPL. Do the business first, including factors like industry and competition. A 10 is invincible. A 1 is hopeless. Jason and Dan both give a 9. Start us off, Jason.
Look, this has become one of the stickiest consumer product brands in the world. I can't think of any other product where its users have a deeper relationship with the product. As much as I despise the recent AT&T Apple commercial, which got the new dad in the delivery room experiencing everything through his iPhone, but like all caricatures, it's based in reality, right? At its core, Apple is the perfecter. It's rarely the innovator and disruptor. And it's built just an incredible monetization engine on top of that.
Wait, that ad was a caricature? You know, people have been dissing Apple, negative calls, saying the product line was boring, out of fashion, no new innovation. Look, those calls greatly exaggerated. They've just done a really good job. They iterate, add some incremental new features, stay buzzworthy, stay at the top of the consumer spotlight. It has been a flawless execution for years and years now.
Well, I mean, and that platform, you know, the health aspects and stuff. So like just the AirPods now are kind of rivaling hearing aids now with the thing. And it's kind of okay. It's like, that's huge, you know, if you had a groundbreaking hearing aid, and then just the watch for things like monitoring your vitals and things like that. I've heard a family member say their doctor said, "Hey, you could hold this clunky machine, or you could just wear an Apple Watch." It's like, okay,
it's the ecosystem. You build the thing, and then the users find the best ways to add use cases for it.
Yeah, it's just that it's so big that it's like, oh yeah, hearing aids, whatever. Let's go on to management. A 10 is Warren Buffett. A 1 is Homer Simpson. Both of you have 9s again. Go ahead, Dan.
Just doubling down. I mean, Tim Cook defied everybody's expectations. Everybody thought after the death of Steve Jobs that Apple was going to, break up, stop being relevant. Some still criticize Apple. They've been slower than some on the artificial intelligence front, but I think waiting will prove to save Apple a lot of money, and then they'll simply just cash in on the winning paradigms that make it through the initial exploration process.
Yeah, when we were talking about business, I talked about Apple as, as rarely the innovator, disruptor, and the perfecter. That's the MO. Now you can say that that's changed a little bit from the Jobs days, but even from the Jobs days, it was kind of the same exact thing. Tim Cook has been incredible at keeping Apple not just the perfecter, but focused on being operationally disciplined and creating value. It's rarely the first market. It's almost always the best market. I think Dan's right. I think the AI example is going to just prove to be another case of it.
Yeah, and it's kind of a feature coming in a little later, because when I have an Apple product, I know it's going to be good. I don't have to be on the cutting edge of messing things up. Let's talk about financials. A 10 is a fortress. A 1 is yikes. Jason's at a 7.5. Dan's at a 7. Go ahead, Jason.
Yeah, I mean, here the reality is emotionally, my 7.5 is lower than Dan's 7. I think that's important to remind the viewers. I also don't want to conflate valuation with financials. That can be really easy to do. This is an expensive business, an expensive stock. Just some numbers. Apple generates over $100 billion a year in free cash flow. It has over 156 billion in cash and short and long-term investments on the balance sheet. Its total long-term liabilities are $132 billion. There's not many companies that could just write a check and pay off literally everything and still have, multiple tens of billions of dollars left over on top of a massively cash cow business. It's incredible. And here's the thing too, they earn more yield on the investments than they do on the debt that they have. So talking about taking money and making money with it, it's incredible.
Rock solid balance sheet, strong cash flow. It's the income statement that gets me. Basically flat revenue, flat earnings for several years. There's just a question of how much demand there can be. But, that's not a bad thing. It's just a mature business, and it's not necessarily the characteristics that you see in other tech-facing stocks that have higher growth rates at this point.
All right, let's talk valuation. It's a good lead up, Dan. How well will Apple stock do over the next 5 years? And how safe is it? 10 is a sure thing, 1 is a lottery ticket.
I see Apple as basically a market performer going forward, 5 to 10% per year annually in the next 5 years. I gave it a safety score of 6. Reason for that, I think that, you've had sort of this upward moving bull market over the past couple of years. Apple, I think, is prone to be a source of funds during a sell-off. The reason for that, it's just such a huge part of major indices. It's on the NASDAQ, so it's part of the QQQ. It's one of the big stocks in the S&P 500. If you get sort of an index fund passive investor move down, Apple's going to be hit. And that's just kind of where it is. The valuation, a lot of folks got into Apple in the early 20 teens when you had earnings multiples, in the teens. We're a lot more expensive than that now.
Yeah, I think that's a really good point too. So you and I came down, Dan, same on that 5 to 10% expected performance, probably somewhere around the market because it's so much of the market. Safety score, I voted a little bit higher than you, but people associate this with Buffett. Buffett was paid less than 15 times free cash flow, right? So he bought it at a value, right? So that's really important to remember. It was expensive at 30 plus times earnings. Now it's 40 plus times earnings. So thinking about the risk of valuation, the fact that it's not a growth company anymore, there's risk if the combination of expectations for what it's doing with AI, plus all that growing high margin services revenue, maybe that gets upended. Investors could get hurt. But I think over 5 years, investors probably make money, probably don't lose money. But those market beating returns, it's hard to imagine that continuing.
Topic time. Dan, is there a company in Apple space you like more?
Apple kind of has a space to itself, but if I had to pick, I'd probably go with Alphabet, ticker GOOG. Not for the smartphone business. I'm not an Android guy, but I think that the company has greater growth potential kind of on the tech services side.
I'm going to pivot, but still kind of focus on thinking about powerful, sticky brands and businesses that have growth potential. And I'm going to say Starbucks is interesting. It actually, it looks more expensive than it really is if you think about the growth potential and the declines in cash flows and revenues. Turnaround has to happen. There's an incredibly loyal base of customers, a lot of international growth ahead of it. And I think it has what I think is probably the best operator and capital allocator in food and beverage running the show now. And that really gives it a leg up over being able to make that turnaround happen and really reignite growth.
Brian Nickel of Chipotle and Taco Bell fame. Thanks to both Jason and to Dan. They've given Apple a solid overall score of 7.4 out of 10, which is short of the 7.9 it got last time when Jim Gillies and Travis Hoyam rated it. It's very rare that Jim and Travis are the more bullish on a well-known popular stock. But big picture, a 7.4 and a 7.9 are in the same ballpark here. Look out for a new scoreboard every market day at 7 p.m. Eastern. Next up is Home Depot. Till then, Fool on. I don't know where Travis is. He's either super optimistic or super pessimistic.
He's the lead singer of the band Binary Outcomes.
That's right.